Let's talk some science and why day traders fail. And I feel stupid, but I also feel very, very justified and that much more confident because I've been using terms over the years. And for those of you that are maybe new to the channel, been around since 2013, but I've been describing certain attributes and, just using kind of my own terms for things. And I had no idea that I could have been just using a scientific term the entire time, but I just recently came across it and discovered it. So I feel stupid in the sense of that this science that I'm going to talk about that's behind me is nothing new. In fact, it's been around for over, I think right around 10 years now, but at least it beautifully, perfectly, like to the T describes why so many traders fail. And now this doesn't only pertain to, day trading. It's, the psychology is pretty much anything in life. But like I said, and if you're honest with yourself, I think you'd probably be able to relate to it, or who knows, maybe you're going through some things right now. So as you see up here, what I'm going to be discussing here is the Dunning-Kruger Effect. And just to throw up on the screen here, like I said, I feel stupid because this study, as you see up here on the screen, won the IG Nobel Prize in 2000. So, I mean, this science is decades old now at this point. So yeah, shame on me. I'm stupid for not even realizing this. But what I've used a lot over the years on the channel is fool's gold, overconfidence. When you don't know what you don't know. And I've tried to kind of describe the downsides of all this. And everything, it's not like everything I've talked about before is not true, but it's now just encapsulated so beautifully with this, effect that exists in the world of a scientific community. And like I said, just to really relate, this won a Nobel Prize. So this is not some sort of obscure study that nobody really agrees with. No, I mean, this has a whole lot of emphasis behind it in terms of, well, yeah, I mean, it won a prize. And as I go through it, I mean, it's one of those things that's kind of obvious. And once you hear it, you're like, oh, well, yeah, that's totally obvious. But it got me and it gets lots of other people. So this is the actual graphic. In fact, I'll put an image up on the graphic of the screen on right now so you can see what it's technically supposed to look like before you go to the chalkboard here. But on the screen, this is my best replication of it. And in a nutshell, and I'm going to go into more of it and use a real life example too, right from the world of trading. But all it says is that when you don't know much, so in other words, when you have very little experience, and they're defining experience as, knowledge. Well, when you don't have much knowledge, when you don't have much experience, you can get very, very overconfident in a hurry. Right here is confidence. And as you see here, and what's the distinguish is there is a little separation. So it's not like you have zero experience and then all of a sudden you have mass confidence. No, you just get a little experience. You get a little experience. You get a little knowledge. And according to this effect, as we'll describe here, you all of a sudden are feeling very, very confident, as in max confidence. However, notice what happens as you work your way this way. So in other words, as you get more experience, as you get more knowledge, as you work closer and closer to becoming an expert, notice what happens to this curve. Of course, it comes down because when you're in the learning phase, you're realizing, holy smokes, and your confidence gets shooken. But of course, it does come back up with the more experience you get. But notice what happens to it. It never ever reaches the max peak because once you have full knowledge, full understanding, you're well aware of, I know a lot. I feel like I'm at an expert level, however that's defined with whatever profession or whatever area of life you're talking about. But because I know so much, I need to be very, very careful. And this definitely holds true in the world of stocks. So to offer up just a little bit more context, let's just first, because I can see you saying right now, and it's a valid, it's a valid rebuttal. It's a valid concern on your part for you to be saying, but Clay, yeah, I get it, but this is just psychology in general. I mean, that doesn't mean that actually, pertains to day trading and just the financial markets, which is a good point. So like I said, let's go to an article from Psychology Today. And I love the article. In fact, I'll link it down below. And it goes through and breaks down all these things. So basically, you may be concerned about, well, yeah, Clay, I get it. But who says that actually applies to trading and the financial markets? So on the screen, you can see who is actually impacted by the Dunning-Kruger effect. The Dunning-Kruger effect has been found in domains ranging from logical reasoning to emotional intelligence, financial knowledge, and firearm safety. So skipping down to the bottom of that paragraph there, the tendency may occur because gaining a small amount of knowledge in an area about which one was previously ignorant can make people feel as though they're suddenly virtual experts. Only after continuing to explore a topic do they realize how extensive it is and how much they still have to master. Now you gotta admit, when I see firearm safety in there, that's a little scary. So yeah, bizarre. But point here being, you saw financial knowledge, right? So the markets. And even if you have a little bit of experience in trading, you know how psychological, how mental of a game, of a business it actually is. But yes, so we've covered that. This certainly applies to the world of finances, financial knowledge, which, trickling down would certainly, apply to trading in the stock market and really any financial market out there. But this is where things get really, really cruel because yes, I get at the core, you may be saying, well, I get it, Clay. When you don't know what you don't know, yeah, sure, you can get a little bit of experience and then all of a sudden have way too much confidence. I get it. That's kind of obvious. To which I would agree. I think we've all been there where we know nothing, then we learn a little bit, then we're like, yeah, I feel good about myself. However, this is the cruel part. And I believe that this secondary reason is why day traders fail, why most traders fail. You've seen the statistics and they're crazy and they're really bad. And the reason being, well, what's called and what's known as the double curse. So what do I mean? So from that same article, what is the double curse of the Dunning-Kruger Effect? The Dunning-Kruger Effect results in what's known as a double curse. Not only do people perform poorly, but they are not self-aware enough to judge themselves accurately and are thus unlikely to learn and grow. So, that's really bad, right? You can experience situations, but because you don't have experience, because you don't have knowledge, because when you don't know what you don't know, part of that is, well, who are you to think that you're going to learn the actual lesson, right? I see it all the time. I did the same thing. When you're new, I'm like, well, yeah, it'll be a good learning experience. In trading, it's always, well, yeah, I might lose some money, but it'll be good learning experiences. I'll learn from it. But no, the Dunning-Kruger Effect says, how are you supposed to learn from it when you don't even know what you don't know? That's just silly. And when you hear it, like, well, yeah, that does actually make sense. Like, if you are brand new, then how do you know that you're going to learn the right lesson? Now, I get it, Clay, this is all theory, but here's something played out perfectly. So we have a trader, and this was posted on one of my many YouTube videos. And like I said, it literally just to a T, explains the Dunning-Kruger Effect and shows it. So this trader took a trade on AAL, and let's read about how it actually went down. So they say, I've entered AAL today in long. It did negative 10%, then it did plus 13%. Patience and no emotion pay off. Maybe you see it already, but let's just recapture what happened. They took a trade in AAL. It did this first after they bought. Negative 10%. It went against them. That's like a lot. Negative 10% against them. But AAL was having a crazy day, so then it eventually went up 13%. So they were able to still walk away with a profit. Now, for you people with a lot of experience, for you people, not even a lot, even just really a little bit of experience, hopefully you're looking and saying, wait a second, you let a stock drop 10% against you and you didn't have a stop loss? Where's your risk management? What are your risk control protocols? Like, how did you sit there and let something drop 10% against you? Now, 0.5%, 1%, okay, that's a much different story. But 10%, how did you let that drop against you? Because, well, they really don't know what they're doing. But they got bailed out by a 13% move back to the upside. And then what was their assessment of the situation? Hey, patience. Hey, no emotion. That pays off. Dunning-Kruger Effect to the T. When you don't know what you don't know what sort of lesson you're actually supposed to take away from it. And I'm not even calling this person stupid because I get it. When you're brand new in the markets, and this is one of the cruel parts about it, is I can see why this person thinks they learned something. Why? Well, because they made money on the trade. So yeah, hey, I made money. Therefore, the logical next conclusion is I did something right. But for those people that get more and more knowledge, you realize that, well, yeah, you can make money, but that doesn't mean you actually did anything right. That doesn't, you could have just gotten flat out lucky. You could have just been behaving in a very, very bad way. In fact, I'll put up an image right now, and I've done a video on this, and I kind of gave my thoughts. Again, one of these situations where I was trying to describe something without actually knowing what it was. And in that video, and I give more actual lessons with real charts. So if you want to kind of see the Dunning-Kruger effect matching up with situations. But in that video, I pretty much talked about one of the difficult things about the market is how it rewards bad behaviors, right? So you can You can be an idiot. You can behave very badly, do a bunch of stupid things, let something go 10% against you, and the market will actually still reward you for it, which is kind of like the Dunning-Kruger effect on steroids, because now you don't even know how to assess something, but you can do something bad and actually be rewarded for it. So, I mean, the way things bleed together is truly, truly savageness in terms of, well, no wonder why it's so hard to be a day trader. Because you have that video, like I said, I'll put the link below, and then you understand how the Dunning-Kruger effect works, and it really becomes a nasty, nasty situation. But this little process here isn't over, right? We still have a next little stage here. So what is this next stage? Well, let's learn about the next part about the Dunning-Kruger effect and how confidence is all working, together to, quite frankly, put this trader now in a very dangerous situation. So from the same article, why do people overestimate their competence? Overestimation, another kind of overconfidence, refers to the discrepancy between someone's skills and their perception of those skills. People who overestimate themselves frequently engage in wishful thinking with harmful consequences. If someone overestimates their capabilities, they may take dangerous risks and overextend themselves beyond their limits, like an athlete pushing themselves to the point of injury. Now, be honest. Have you been here before? Have you been here where this person very well could be going? You see some success, and success being defined as, hey, you make some money. Hey, I made some more money. So what are you going to do? Well, per the Dunning-Kruger effect, you're going to start to overestimate things. But again, to be fair, especially in the world of the market where you can be rewarded for behaving badly, for bad habits, I mean, I get it. I'm not calling anybody stupid, because why would you not start to overestimate your skills? You're making money. But you overestimate your capabilities, which, what did the Dunning-Kruger effect says you're going to start to do? You're going to start to take dangerous risks. And what is the dangerous risks that I see all the time? And maybe you've done it. I think we've all done it if we're being honest with ourselves. Well, in this trader situation, what are they? They're overestimating their context. You know what? Instead of only buying, and I'm just totally making this up, let's say this person just bought 100 shares. Well, maybe a couple of trades down the line, because they're overestimating their confidence, their abilities, you know what? Let's do 500 shares. Have you been there? You raise your position sizing, you increase your position, which, when you don't know, that's actually a massive way to, even if you're using stop losses, your risk profile changes a whole lot when all of a sudden you increase position size, when you take on more risk. And like I said, because of the Dunning-Kruger effect, this risk can be kind of hiding in plain sight. And now all of a sudden, the rest of the story, especially if you've done it. You increase position size, and then something crazy goes on, and poof, all your wins are gone. Maybe all the winning, all the money you made, a significant portion of it's gone. Maybe not only is all of it gone, but now you've actually lost some of your initial principal. I've seen it all over the place. I've been all over the place. But that is what's going on here, is you have totally the Dunning-Kruger effect. Some people going through experiences because of their lack of knowledge, not knowing how to assess the situation. And as it states, that's going to make it very difficult to learn and grow when you don't know how to assess things. And then you can get false hope. You can start to get overconfidence. When you get that overconfidence because you're overestimating things, well, you start to behave and you start to take on higher risk situations. And like I said, I'm not saying the only higher risk that you could take as a trader is just increasing your position size, but I think that's probably the most common one out there. So at the end of the day, and I'm not gonna, I'll encourage you to go read the article, but just to wrap things up, what is the actual solution to all this? And the actual solution is, you have to go out there and you have to actually surround yourself with people that have been there, have done that. Where if you tell somebody in this situation, so for example, and I'm not saying that my community is the only one out there that offers this, so don't get me wrong here, but just because I can speak with confidence, I can speak in a factual manner. Had this person showed up in my chat room community, for example, and said, hey, I bought AAL. Man, the thing went 10% against me. But you know what? No emotions. I was patient. And eventually it went up 13%. I made money. You would have all kinds of people, more people, and I'm not saying necessarily experts, but more people down around here talking to this person who's very clearly, let's just call it, where's another color? We'll just go with green. Who's someone down around here, and these people are going to be saying to this person over here, hey, I'll just put that, right? Hey, that's not good, man. That's, I get it. I used to be like you too when I was down here. And then this is the bad part though, is where is this person's confidence right now? way up here. So what are they going to say to those people? Not in all situations, but in many situations. Whatever, you hater. Don't be jealous of me. I got it all figured. Look at all these people telling me that the way I behaved, that's not the hater. I mean, do you see why it's so hard to become a profitable trader, to be consistent? Because again, to this person's point, I can see why they would be calling those people haters. They just had something go 10% against them, but they were patient enough. They had no emotion, and they walked away making money. So who are you to tell me that I was doing things wrong? I made money. How'd you do on the trade? And here's the kicker. What are the disciplined people going to be saying on that trade? Well, I actually lost money on it. Because, well, they were disciplined. They honored stop losses. They managed their risk. And in that situation, yes, you should have taken money. So now you have that additional factor in there, right? The very same people that are telling this person they behaved badly are also going to have to tell those persons that they lost money on the trade. So why would that person listen to those people that actually are more qualified, that have more experience? Why would they listen to them? You lost money on the trade. I made money. The Dunning-Kruger Effect. Savage mind game that it's played on us. And then, like I said, and I keep bringing this up, but the financial markets really sprinkle in a whole nother layer, because you can behave badly but still have quote unquote good results. You can behave badly but still make money. And it creates just a sloppy mess where you have people trying to, I mean, you get the idea right now. So this is, I guess all science is still kind of theory, but I mean, at this point, I'm not even gonna say this is why I think day trading so hard. This is why people fail. This is why people fail as day traders. Like scientifically proven, Nobel Prize research, 100% pertains to trading. And then, like I said, you sprinkle in the whole idea of bad behavior can still make you money in the markets. And the Dunning-Kruger effect, learn more about it. Learn more about the solutions to it. Like I said, one solution would be just get yourself in a community. And once you get yourself in that community, be open to constructive criticism. Be open to the fact that people may be telling you things that in your mind aren't adding up. Wait, why are you telling me this? I made money, or I did. Just be open to it. Dunning-Kruger effect. Maybe that's going on. And there are other solutions to it, but at the core, the solution is you got to be able to take constructive criticism from people that are down here, which can be difficult in some situations where, maybe the people that you all took the same trade, but those people trying to give you advice, trying to offer you up warnings, lost money on that trade when you made money. So like I said, just a twisted mess. So I'd encourage you to click the article down below, read more about the Dunning-Kruger effect. And like I said, just be honest with yourself. Can you see it some places in your trading? Can you maybe feel yourself tiptoeing around some areas? And and I'm well aware of the Dunning-Kruger effect and my ability to explain the Dunning-Kruger effect. Maybe I'm actually missing out on some things. Maybe I'm up, because when you don't know what you don't know, I'm still somewhere around here. But I think the one thing that hopefully counterbalances it for me is, like I said, I've been around since 2013. So a lot of these things that the Dunning-Kruger effect is mapping out, I've seen over and over again, but instead of having to use, fool's gold, or when you don't know what you don't know, or, oh, you're getting overconfident, I can now just simply tell these people, hey, I'd encourage you to check out the Dunning-Kruger effect, because that's what's going on. So no more of me trying to describe science that already exists. Again, stupid. I should have learned about this years ago, but I guess maybe that's the Dunning-Kruger effect in motion right there. But maybe some sweet irony to end the video. But hopefully you enjoyed this. Hopefully it can help you out. If you do enjoy more of these science-based videos where I'm using actual science and psychology to explain different areas in trading, then let me know in the comment section below, or just hit that like button, because I'm more than willing to do more videos like this. But if people don't really enjoy the scientific twist of things, then I'll use my time elsewhere. But let me know in the comment section. Also, check out the channel as a whole. If you like what you see, hit that subscribe button. So yes, be aware of the Dunning-Kruger effect. Odds are it's probably playing and toying with your trading right now. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.